Hey everyone, welcome back to Corporate Decoder, the place where we try to find the skeletons in the corporate closet. And let me tell you, this latest filing has a few interesting ones for us today. We are diving into the second quarter financial report for Strategic Acquisitions Incorporated. And folks, if you are looking for a company that is really in a tight spot, this is it. They are making some big moves, or trying to, but the numbers are telling a tough story. So this is for Strategic Acquisitions Incorporated, ticker symbol STQN, and they just dropped their Q3 report for the period ending the 30th of September of this year. What is really going on here is a company that is scrambling for cash and facing some serious doubts about its ability to keep its doors open. Let's start with the balance sheet as of the 30th of September 2025. Their cash on hand is a measly $1936. Yes, you heard that right. You and I probably have more cash in our pockets right now. Compare that to a much healthier $23,281 just at the end of last year. That is a massive drop, a real sign of distress. Their total assets are now just under $2,000. That is rock bottom, folks. On the flip side, their liabilities are significantly higher. Accounts payable and accrued expenses are almost $5,000. And they still have a debt of over $95,000 due to a related party that is essentially an interest-free loan, but it is still money they owe. And the shareholders' equity, or rather deficit, is just staggering. They have a deficit of nearly $3,000 as of the 30th of September 2025. This means the liabilities are greater than the assets. This is a classic sign of a company in financial trouble. The numbers from December 2024 don't paint a much prettier picture, with a deficit of over $82,000, which shows they are digging themselves deeper. Now let's look at how they have been performing. For the 3 months ending the 30th of September 2025, they had zero revenue from loan administrative service fees and zero interest income. That is right, absolutely nothing. For the same period in 2024, they had just over $16,000 in interest income. So they have gone from making some money to making no money. Their operating expenses are also a mess. For the 3 months ending the 30th of September 2025, they actually report a negative selling general and administrative expense of over $3,300. This sounds good, but it is not really, because the report explains this is due to a reversal of an over-accrued professional fee. So it's not that they cut costs, it's that they recorded expenses incorrectly before. For the same period in 2024, these expenses were over $44,000. The 9-month figures are also grim. For the 9 months ending the 30th of September 2025, they reported a loss of over $24,000. For the same period in 2024, that loss was over $73,000. The bottom line is a net loss for both periods. In the 3 months ending the 30th of September 2025, they managed a tiny net income of $3,347. Now that sounds good, doesn't it? But look at the next line, the 9 months ended the 30th of September 2025. That is a net loss of over $24,000. And the prior year was much worse, with a loss of nearly $30,000 for the quarter and over $95,000 for the 9 months. The earnings per S-share is essentially zero, which means for every share you own, you are not making any money. Looking at the shareholders' equity, for the 9 months ending the 30th of September 2025, they had a net loss of over $25,000. And for the same period in 2024, it was a loss of over $43,000. Then they had a net income in the latest quarter of $3,347. But what is really interesting is a capital contribution of over $103,000. This is essentially new money coming into the company to keep it afloat. It is not generated from operations, it is external funding. This is a clear signal that the company cannot sustain itself without these injections of cash. Now let's talk about cash flow. For the 9 months ending the 30th of September 2025, they used over $29,000 in operating activities. This means their core business is burning cash. They also had no cash flow from investing activities, which means they aren't buying or selling any significant assets. Their financing activities brought in about $7,700. Contrast this with the 9 months ending the 30th of September 2024, where they used over $77,000 in operating activities. They had over $1.3 million in cash from investing activities, primarily from collecting a loan receivable. But they also paid out over $1.3 million to repay a note payable. So it is a lot of movement, but not necessarily growth. Significantly, the net change in cash for the 9 months ending the 30th of September 2025 shows a decrease of over $21,000, meaning they are spending more than they are bringing in. Digging into the notes, we see that this company completed a significant reverse acquisition back in December 2022. They essentially merged with a company called Exworth Union Incorporated. Before that, Strategic Acquisitions Incorporated was pretty much a shell company with no real business. Exworth Union was the one actually doing something, offering loans collateralized by digital assets like Bitcoin. The report states that as of the 30th of September 2025, there are no loans receivable outstanding and no digital assets as collateral. This means their primary business line is currently dormant. They are exploring ways to add to and augment their business lines, looking for new revenue streams because their current ones are not working. This next part is crucial. Under going concern uncertainty, they state that the company had cash of $1936 and a shareholder deficit of nearly $3,000. They also had losses for the 9 months ended the 30th of September 2025 and 2024. The report explicitly says these factors, among others, raise substantial doubt about the ability of the company to continue as a going concern for a reasonable period of time. This is corporate speak for we might go bankrupt. Management plans to seek debt and/or equity financing, but there is no guarantee they will succeed. Looking at shareholder equity, we see a capital contribution of over $103,000 on the 30th of September 2025 to cancel working capital loans. This is money provided by Exworth Management LLC, the controlling shareholder. It is essentially them injecting more cash to keep the company alive. It is not revenue, it is not profit, it is them putting their own money in to prevent a collapse. Interestingly, they have a significant net operating loss carry forward. For us income tax purposes, Strategic Acquisitions has about $621,000 in net operating loss carry forwards at the 30th of September 2025. Union also has a net operating loss carry forward of about $388,000. This means they have had substantial losses in the past which could offset future taxable income, but it doesn't mean they are making money now. Here in the risk section, they mention that one borrower represented 100% of the company's total interest income for the 9 months ended the 30th of September 2024. That is a massive concentration risk. If that one borrower had walked away, they would have had no interest income. But then they state importantly, there was no borrowers or lenders as of the 30th of September 2025 and the 31st of December 2024. This means their income generating operations completely ceased. That is a bold move to go from relying on one customer to having no customers. In the management discussion and analysis section, they reiterate that they were a shell company before merging with Exworth Union. They are still exploring new business lines because their current digital asset-backed lending is not yielding results. They mention their cash on hand and admit they might not be able to execute their business plan if they can't raise more capital. And then there is the part about internal controls. Management concluded that their internal control over financial reporting was not effective as of the 30th of June 2025. The reasons cited are a lack of an oversight committee, insufficient accounting personnel for appropriate segregation of duties, and a lack of personnel with familiarity with us generally accepted accounting principles. This is a major red flag. It means their financial reporting might not be accurate or reliable due to internal weaknesses. They are essentially admitting they don't have the proper systems in place to manage their finances correctly. So what is the story here? Strategic Acquisitions Incorporated is in a precarious financial position. Their core business of digital asset lending has essentially stopped generating revenue. They are heavily reliant on capital injections from their controlling shareholder to stay afloat. Their financial controls are weak, and they are openly stating there is substantial doubt about their ability to continue as a going concern. It looks like a company that has either lost its way or is struggling desperately to pivot to something new. Without significant new funding and a successful launch of new revenue streams, this company is at a very high risk of failure. The fact that they had zero revenue from their stated core business for the entire 9 months ending the 30th of September 2025 and are admitting severe internal control issues really paints a grim picture. Alright, that is our deep dive into Strategic Acquisitions Incorporated's latest filing. What is your take on their situation? Are they going to pull through, or is this the beginning of the end? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button. It really helps us out, and subscribe if you want more of these corporate deep dives. And don't forget to join our Discord community, link is in the description for more discussions and insights. Thanks for watching, folks, and we will see you in the next one.